Bitcoin and most major cryptocurrencies saw prices drop on Monday, which is not entirely unexpected given the upcoming holiday season. With Christmas right around the corner, the consensus view is that investors may be selling off crypto holdings to have extra cash on hand for holiday spending. This liquidation is draining liquidity from crypto markets, which tends to amplify downward price moves when trading volume thins out. However, the markets bounced back Tuesday following positive news. 7RCC became the latest company to file for regulatory approval of a Bitcoin spot exchange-traded fund, ETF. The proposed ETF would provide direct Bitcoin exposure that could draw billions in new investments to the crypto space. If regulators approve 7RCC's idea, billions more dollars could pour into Bitcoin. Crypto leaders are crossing their fingers for their Christmas wish. The announcement led to a 5% bounce back in Bitcoin's price from recent lows. More companies want to open Bitcoin funds for the average investor. That shows crypto is going mainstream. Getting official approval could let millions of regular people invest a little in Bitcoin instead of just big shots. But the SEC keeps raining on the parade. They say they worry about sketchy behavior if Bitcoin trades directly. So the SEC gave a strict rule: any new Bitcoin funds have to use plain old cash, no crypto allowed. Companies aren't happy, but they gotta obey for now. The SEC claims it's to keep things safe, but some think they just don't want regular folks gambling on crypto. So they'll stall as long as possible with lame excuses. BlackRock wanted a Bitcoin ETF that could trade cash or Bitcoin to make shares. But the SEC said no way. They demanded only cash trading, no direct Bitcoin allowed. BlackRock really thought using Bitcoin directly made more sense. But after talking to the SEC bosses, they caved and changed their ETF proposal to cash-only trades. At least for now, while begging to add Bitcoin later if the SEC ever got less strict. Other big investment companies like Valkyrie and Invesco also just rewrote their Bitcoin ETF plans. Their new forms highlight how they'll stick to cash-based trading too. Everyone rushing to only use cash redemptions shows the SEC has all the power here. They're basically blackmailing companies to follow strict cash trading rules if they want any chance the SEC approves a Bitcoin ETF. By forcing these cash terms, the SEC basically crushed any creative ideas companies had. Now experts say a Bitcoin ETF probably won't trade Bitcoin directly for a long while thanks to the SEC roadblock. Since the SEC wants any approved Bitcoin ETFs to use cash redemptions. This means buying and selling Bitcoin with cash to create or cancel ETF shares. Companies had wanted to just trade the Bitcoin itself directly. The SEC argues cash trading makes things safer for investors. But many crypto experts disagree. They think the SEC is just finding new excuses to block Bitcoin ETFs. In the past, companies showed cash redemptions have extra fees and make things complicated. Other investments like gold ETFs are allowed to trade directly. These experts feel the SEC keeps moving the goalposts on what Bitcoin ETFs have to do for approval. First, no ETFs were allowed at all. Now Bitcoin futures ETFs are fine, but the SEC still delays spot Bitcoin. Requirements keep changing, but the rejection continues. Firms may follow the cash redemption rule to try getting approved again. But some view this as giving in to unfair demands. The SEC likely has other reasons lined up to keep blocking Bitcoin ETFs. That's despite more institutions and companies wanting to invest in crypto. In basic terms, the SEC claims cash redemptions reduce manipulation risks. But critics feel they just keep inventing new hoops for Bitcoin ETFs to jump through. And they think the SEC will keep doing that no matter what the crypto industry does to make things safer. That's it for today. I will see you on another video soon.